Hey guys, Shiv Haria here from Lifestyle Property People. Just wanted to jump on and give you a quick update on what we are currently seeing right now in the property market, and I'm pretty sure this is evident in the rest of the economy at the moment anyway. So the first thing is that the supply of properties is remaining pretty stable. We're not seeing massive drop or massive increase in the supply of properties coming to the market at the moment for us to buy. In terms of demand, we are seeing that demand is dropping off. Why is the demand dropping off? Because ultimately there's a lot of volatility and uncertainty in the economy at the moment, and that uncertainty means that there's uncertainty in the mortgage rates as well. So when you go to buy a property, usually we used to get rates of between sort of 2 and 3%. This was about 6 weeks ago. Now our rates are much more like 4 and 5%, and we think that those are going to go up even further. And those rate increases that the mortgage lenders are putting on us is just because they don't know how to price the rates. They don't understand what is going to happen to the rates for the government or the Bank of England's base rates over the next year, 2 years. And as a result, what they're doing is they're increasing their rates so that they have a buffer to play with if the Bank of England base rate doesn't come down as quickly as they think it's going to come down. So that's what's happening. There's some uncertainty in the mortgage market, and because there's uncertainty, the prices of mortgages, the mortgage interest rate is higher than it would normally be. Because the mortgage interest rate is higher than it would normally be, it means that the rental returns are lower than they would normally be, which means that a lot of people are saying, well, actually, you know what, I'm just going to hold off right now, and maybe I'll buy again in 6 months or a year from now or in 2 years from now when I decide, when all this is kind of over. So where is the opportunity? The opportunity is for people that are buying for the long term. Why? Because when you buy for the long term, you don't really care that much about the short term issues and challenges that we're going through. So let's say, for example, you buy the house for £150,000 and it drops in value to £148,000. Well, it's not really here or there, because in 10 years' time, you know that £150,000 house is probably going to be worth somewhere in the region of £300,000, or even more than that if we take the trend over the last 22 years. So over the long term, we're going to get an extra 150 grand on the growth, and so don't really mind so much about the fact that it goes up or down by £2,000 this way or that way. So that's on the growth side of stuff. On the rental side of stuff, I suppose the same is also true. If the mortgage interest rate is slightly higher right now, and therefore you're making slightly lower rental return right this second, well, in 2 years' time you can refinance your property and then you can make higher rental return. Or in a year from now, maybe the rents have gone up and you can increase your rent, and so your rental return will go up as well. So ultimately there is a short-term problem, but people that are looking to buy property for the long term shouldn't really be affected by this. And where the real opportunity is if you're looking to buy in cash. Now, if you have cash sitting around in your bank, and I'm talking about if you've got, £150,000 sitting around in your bank, and you wanted to buy a property with that cash, now is a great time for you to be able to do that. Why? Because if I was trying to sell a property for, let's say, £160,000 to someone that was buying with a mortgage, I might be inclined to accept an offer of maybe £150,000 of someone that's going to buy with cash. Why would I do that? Why would I lose £10,000? Because of the speed and the certainty of that the sale provides when someone's buying with cash. If they're buying with cash, I know that we're going to complete the sale within 6 to 8 weeks. We'll be done, and I know that I can then move on with my life. I can get on with all the things that I want to do. As well as that, there is certainty. I don't have to rely on a mortgage lender accepting my mortgage. What would happen perhaps if you have a mortgage, someone who's buying with a mortgage, is either the lender would, the rates would be really high, and then they would say, well, we don't know if we can really afford this or whether this is a really good idea. Or it would be that the rates are palatable, but in, say, 2 months from now or 3 months from now, when we actually get round to getting a mortgage offer, the lender says, oh, well, for whatever reason it is, we don't think we want to lend to you. And therefore, the person who's selling their house has to basically drop that buyer and start from scratch all over again. So I think there's real opportunity for people that want to buy in cash right now, because we can negotiate really, really good deals for people that want to buy in cash for two reasons. One is because the demand for properties has reduced. So there's less people actually in the market wanting to buy properties right now. And secondly is because from a seller's perspective, they would much rather have the speed and certainty of someone that's going to buy in cash than to have to hold out for a mortgage that may or may not actually end up coming through. So that's exactly what's going on in the market right now. Like I said, this is what's happening exactly right now. Today is Tuesday the 4th of October, and in a week from now maybe I'll give another update because things are changing very, very rapidly, and I'm expecting that in a week or 2 weeks from now things will have changed again. I think really what needs to happen is that the Bank of England need to put out a statement showing that, their new forecast for the interest rate, for the base rate, because if they put out a statement with their new forecast, that brings a bit more certainty into the market of, okay, well, this is what's actually going to happen. And that means that mortgage lenders know how to price their rates. And that means that those rates will come down from where they are today. And it also means that, the public, confidence in the market will return, because people will say, okay, well, we know kind of what's going to happen. So I think that's what we need to mention. And the final